Ladies and gents, welcome back. I think the last panel discussion set up us nicely for what we're talking about today, and that is how businesses are dealing with the different complications when it comes to global trade, but the turmoil that we see beyond that. Paul Bulcke is here with us. He's Chief Investment Officer for Switzerland and Global Emerging Markets at UBS. Thank you so much for your time. He's in the middle. Paul Bulcke, Honorary Chairman of the Board of Directors at Nestlé. Great to have you, for you to grace us with your presence. Thank you so much. And Rahul Sagal, he is the CEO, of course, of the Swiss American Chamber of Commerce. Thank you so much for your time as well. So to keep you active, once again, you can put your questions to the speakers, of course, but also we want to do another polling question with you. So let's get out the phone once again, and we'll discuss it on the panel as well. What is the top challenge international firms are facing today? What is the top challenge? And let's show you the result as soon as we have it. Are you voting too, Paul? Yes.
I want to have a voice.
Yes, that's important.
You're such a good Swiss citizen, eh?
Regulatory complexity. That one's interesting. Supply chain resilience, geopolitical risk, climate transition. It's quite at the bottom. Regulatory complexity, that seems to... Maybe we'll keep it going for a little bit. But I think one thing is clear, there's an abundance of challenges for international firms, but I just want to connect this to the last panel that we had and talk about the trade environment, because Rahul, you and I, we spoke on August 1st once the tariffs hit, and of course that should have been a day of fireworks and barbecues, but it was not. It was a big shock. Talk to us about maybe your reaction on the day. You were up early, and talk to us about how businesses in Switzerland have fared since.
Yeah, thank you. Firstly, thank you for having me. So I think, like everyone else, we did not expect it, and I think it was a shock to get those 39%, because Switzerland had the rate of 31%, and the goal was to move away from 31, but in the other direction, and we went further up, which was far more than we even anticipated. I also do not think that it was to be expected, since in the phase that led up to that 1st of August, we had, after the 2nd of April, and I refuse to call it Liberation Day, a long period of conversations the Swiss government had and the businesses had with the Trump administration, over 20 rounds of negotiations that led up to some sort of a document beginning July or end of June, beginning July, that looked like something that the UK had and also other countries had negotiated, all respecting, by the way, the WTO rules. And we did not, and then there was kind of one month of standstill where during which many other countries had concluded trade deals. And I think then it was kind of clear that in that month of July, we need to find some sort of a solution with the US, because, as I mentioned before, the idea was to prevent a snapback to the 31%. And then whatever happened. And your second question was, how are business coping with it? It's interesting what was said on the previous panel, that it's a turmoil, and trade is a little bit under pressure, but not as much as it seems. So in Switzerland, for example, according to SECO, only 10% of the Swiss exports are subject to these additional 39%, which also guides what the government is going to do to support those businesses. Obviously, it is also due to the structure. The tariffs don't cover services. They do not cover pharmaceuticals. They do not cover gold. So a lot of the sectors are excluded. However, for the ones that are part of this 39% additional tariffs, it's very tough, because typically it hits the industrial sector, because they manufacture a lot in Switzerland. They have lost about 10 to 15% in currency. They have lost 39% additional tariffs, and then since Switzerland does not have a free trade agreement with the US, we also have the existing tariffs. So that they are somewhere usually between 3 to 10%. So a Swiss company has, since the 2nd of April, additional cost of 50 to 60% compared to a US competitor, which is obviously not sustainable in the long run.
So there was a lot of finger pointing in the days after and a lot of, sort of naming and shaming. And one theory is that, of course, the pharmaceutical sector holds Switzerland hostage. These were the comments from one of the CEOs in the watch export industry. Do you subscribe to that?
No, not at all. I do not think that had an effect on these current negotiations.
But we know that Trump does not like the sky-high drug prices that these companies, Roche and Novartis, are charging in the U.S. So it must be part of his grievance, no?
And on the other hand, there are no tariffs on the pharmaceuticals
Not yet.
right now. As we speak, yeah. We can only talk about what's right now, and there are no tariffs, and I'm not sure whether Swiss pharma companies are ever going to face tariffs, actually, since their level of domestic manufacturing is quite high. Already before Trump came to office, 80 of the two large Swiss pharmaceutical companies, 80% of their manufacturing for the US was done in the US, so we are talking really about the 20% delta that are still required to onshore if one wanted to do that.
Now, of course, you represent the SMEs, the small and medium-sized enterprises, of course. Now, I've got sitting next to me Paul Bulcke, who is the honorary chairman of one of the largest consumer groups in the world. So if you're, I don't know, a speedboat, a small boat, you're a tanker. And a tanker doesn't necessarily always, crash when there's a huge wave. Are you immune to the tariffs because of the size of your company and the presence all over the world?
First, it's nice to be here, and we are not a tanker.
What are you?
We are a fleet of many ships. And we have to maintain agility too, but we have a size. And tariffs, United States, first of all, we produce, in general, 95% of what we sell is produced locally because food has normally short supply chains, local production, local farmers, local consumers. But yeah, it does affect certain parts of our business. Just think about Nespresso. It's produced, at least the coffee is coming in, but it's produced in Switzerland, and the United States became the biggest market we have for Nespresso, which is proof of success, and yet there is the tariffs there, etc. I feel the pharmaceutical products should be cheaper so they have more money to buy our capsules, you see. But, and I know also it's not because of the price here to there, it's the system in the United States that makes them very expensive, but that's another story. So, yeah, when you have tariffs, with a partner like North America doing what they do and imposing some tariffs, it always affects you. Now, we as a company also, we learn to help to frame normality and common sense into the global context we're living in. But when you cannot move that, then you have to accept it and adapt. I mean, and that's what we do. I mean, on capsules, you don't put a factory in there from one day to another either. And you have to see and maintain these things in context. And the context is also the numbers that we see here. It's only that percent. It's only this, only there. And I know that for small companies, these tariffs, it's a little bit, you cannot die in 2 centimeters of water. Depends. When your business is 100% linked with, then you're in trouble. And I think we should see what we do there. But in general, you have to maintain context also in time. I don't believe these tariffs are going to fall all of a sudden after, etc. That's because they get used to it. It's like a drug, as I heard now. But we're going to have a couple of possibilities to adapt to. But I would definitely, on tariffs specifically, but in general, on all the turbulences we have, the crisis we have, we may come there a bit because it's not only tariffs. Don't overreact on the short term. You have to maintain contextual thinking, and that's what we do. So we have a natural hedge as a company, true, and that is linked with kinds of products and all that. We are local, and yeah, we're going to handle the Nespresso thing.
How are you going to handle the Nespresso thing?
By increasing, they're going to increase the price, so it's going to be more expensive. True. We are also revisiting some parts. Coffee prices are going down, some that may help too. But we're not going to start jumping on this and saying we're going to build a factory here and there, because these are promises, words, and they don't have it in 2 years, 3 years, anyhow. So, but there's many levers that you have to work on. And for us, we don't sell prices, we sell value for the consumer. So we're going to make Clooney work harder.
Clooney, yes. Nice contract there. Michael, Paul talked about many avenues to adapt for companies big and small. What have you seen in the companies that you cover and that you work with in terms of how well they've adapted?
Yeah, I mean, first of all, just to add on the pharma story, right? I mean, I for myself, I decided I don't want to be in the business of predicting what President Trump is doing, right? Based on a sort of, because I can't, right? And sort of like after.
No, nobody can.
Yeah, and so after a while, the great thing about getting older is sort of you start to learn what you can, what you can't, right? And you do the former and you stop the latter, right? And also, I guess on that point, you also don't want to be necessarily in the business of, leading these negotiations and to the finger pointing, right? I guess that was a phone call no one really wanted to do, and someone had to do it, right? But coming back to your question, I think, this took us by surprise, of course, and we went in totally the wrong direction. But since then, I think by and large, it's not as bad as we thought it would be. And we heard, Professor Olsa commenting on that as well. People revising forecasts, and yes, I think the pain will come later. We're seeing, to the coffee prices, we're seeing, U.S. good price inflation picking up, so the tariffs ultimately will, to a significant extent, being passed on ultimately on U.S. consumers. So I think, the business will be fine. But also, I'm always a big fan of going back in history and looking at previous episodes where we had similar things happening. And of course, we didn't have a tariff shock, but we had the Swiss franc adjustment on the euro-Swiss, and there's someone in this room who could comment better on this than I can. But this was a huge shock, right? And it was a shock that affected everybody, not only goods exporter, but all the Swiss companies. And that, to us, was just very immediately the first point where we started to again go back 2015, studying what happened exactly and how was the pass-through into, stock markets, bond markets, etc. And, with hindsight, yes, it was painful, and specifically it was more painful to the small companies that couldn't really adjust, that don't have the flexibility, but ultimately, Switzerland managed. I mean, I always say, we should not underappreciate or underestimate the ability of people to adjust specifically in crisis. That's what I think human beings are really, really good at. And so I think from now, what we see in this specific thing, as it evolves, I'd say overall significantly better than I expected 1st of August.
Let's hear some specifics here of companies that you're working with in terms of how they've dealt. Have the majority of them, have they been able to raise prices? I spoke to one chocolate producer, a very small one, don't worry, but he said that I can't raise prices any further. No one's going to buy it. There's a limit, obviously, given that the consumer is very price conscious anyways in this environment. Others are finding loopholes in the sense that maybe they lower the goods price, but they increase the services price of their product. What are some of the loopholes? What are some of the tools that companies are using?
I'll just get into that. I just want to say something on those 10% and the adjusting to the new environment. What I think is critical here, what's happening is that you have the majority of the economy that is not touched by these additional 39%. However, the ones that are affected, they have been suffering for the last about 7 to 10 years because mainly because the European Union and number one being Germany has been flat. So if you look at the German growth, it has been flat over the last 7 years, and earlier for 70 years till 2021, Germany used to be the largest export market for Swiss products. Now it's the US as a single market. However, still 47% roughly of Swiss exports go to the EU. And Switzerland is one of the few industrialized countries that is actually still industrialized, meaning thereby that 20 to 25% of GDP comes from the industrial sector. If you look at the US or the UK, you're somewhere down to 10%. So my largest fear in this current constellation, franc shock and all these other, and COVID and all comparisons aside, is that if it stays this way, we are going to also slowly but surely start deindustrializing and becoming one of these, I hate to say the word, but average industrialized nation that mainly does services and has actually no specialty, because one of the strengths of the Swiss economy is also that a lot of sectors that we have were developed over time. If you take, we talked about pharmaceuticals, so at that time, at some point, they were making textiles in St. Gallen, and then they started to put paint on them or colors, and that created the chemical industry further down the Rhine, or also the watchmaking and the med tech. And also, I have a fear that we're going to lose all of that if it remains this way. Coming to your specific questions, I have three categories in my head of our member companies. Roughly one are the big ones, like Nestlé, but also others. They are local for local, more or less. And they are also, they care more about, let's say, copper tariffs than about these 39%. Then you have kind of the mid-range, and they usually have multiple supply chain or multiple sources. So they could say, oh, currently I'm going to now send it from Poland or from Germany or even from another country to the US. It costs money, but it's possible. The worst hit are the small ones that actually manufacture in Switzerland and that don't have any other way to go. And some of them, they created stocks, large stocks, because between the 1st of August and the 9th of August, when the tariffs came into effect, for example, we have some watch companies, everyone in the executive board went to the US with 2 suitcases of watches, and actually...
But legally?
Totally, everything it was legal because you paid tariffs, but you paid 10% and not 39%. Others have other ways to go about, like that you source from a different country, that you sell it at what is called cost plus in transfer pricing, that you actually do not take the sales price in the US, but you take actually the customs value, which is much lower, and you have 40% or 39% on the customs value. So there are many ways how to handle, but many cannot, and for many it is not exactly what they want because it doesn't suit the business model actually.
Mm-hmm. Innovation was mentioned by Hélène in her input speech earlier on. Innovation and rewiring of supply chains. How's that happening at Nestlé?
Well, first of all, I mentioned before that we have this hedge of locally. That's true, but yet at the same time, you have to re-engineer your supply chains a bit, and I speak in general now, because with these tariffs and the trade, although relatively, we were working towards, worldwide, towards the most cost-efficient supply chains you could have. I think we're going to have to rewire. It's not going to be the most cost-efficient anymore, but you have to de-risk. Now, de-risk, what does it mean? It means that, for example, if we have a small ingredient of something somewhere that we use worldwide and one supplier, that's not going to work anymore. So we're going to have to look for alternative suppliers. And that's basically making your supply chain, although we are quite local, more robust, and also agility. And that's where then also the AI can come in. If you think the 100,000 SKUs we have and all the formulas and all the ingredients we have, to know the alternatives, how you can rewire, re-engineer even your formula, etc. All these things are going to come into play. And so these are the things that we are accelerating now because of not only USA, we do see a certain dimension of separation and the polarization of things, although I do believe also you cannot defy gravity. Globalization is coming. Think about data, information. Globalization is not only physical, but so I do believe that's going to continue, but it actually creates also, even if the borders are open, it gives you resilience in your supply chain, and that's very important. So that's what we're working on in an accelerated way now.
Michael, you have a pretty good grasp of how international investors are feeling, wealthy investors, of course, some of the biggest family offices in the world. And you could argue, if you take a look at the equity markets, asset prices overall, and we heard from Mr. Rajan before that, everything looks pretty frothy right now. No one seems to be seeing any real problem. In terms of the sort of bifurcation that we're seeing, though, equity prices, record highs, gold prices also recently at record highs.
Yes, Swiss franc.
And the Swiss franc, of course, as a safe haven, that's quite a contrast. So what really is going on here?
Yeah, you're getting, from different assets, you're getting different messages about what's going on the planet. But perhaps just quickly, I think the questions we had before and the answers that were chosen, it just shows you also that, the focus, us, the media, the discussions we're having, even in this panel, it's very much also guided by, select media, select people sort of setting the agenda. And often, we tend to then miss bigger, more relevant issues. And I think Paul made some very interesting comments in that regard just now about, AI and how AI can potentially, not today and tomorrow. This is not, hey guys, here is Copilot, do something great with it, right? That's not how it works. But if you fast forward 2-3 years, it's well possible that, the average productivity on, say, a service company will be somewhat higher than it is today, which can have a huge implication on how we think about EPS growth and costs and P&L revenues of that company. And so, financial markets, sometimes right, sometimes wrong, ultimately want to make a business by trying to anticipate some of these developments. And so what you're seeing there is a huge, I call it euphoria, and I think it's very, very clear that not all of that money will be well invested. That can help to explain that the equity markets are doing well, that specifically also the US is doing well with all these great tech companies, that Europe perhaps is having a more difficult time. That China specifically is catching up, but at the same time, you look at gold prices, you look at the Swiss franc. The message there is very clear. Something is out of balance. It's around debt sustainability. This is for me one of the big questions. How are we going to resolve these giant burdens of debt? The reason President Trump introduced his tariffs is not only to hurt the small Swiss companies and the watchmakers and the pharmaceuticals. It's ultimately about finding ways to tap into revenues that don't have to be paid by the people voting for him.
Mm-hmm, absolutely. I want to come back to innovation, though. Again, something that Hélène mentioned, something that Paul alluded to. Switzerland is always seen as the world champion of innovation. Can the Swiss companies that you work with, can they innovate their way out of this crisis, the relative crisis that we're in?
I agree that Swiss companies are very strong in innovation, and I think that they are all very aware of the fact that without being the best at what they're doing, they will not be able to succeed, because in Switzerland, per definition, we have higher prices. And I think that's one of the reasons why many can even sustain in this market environment, because they have, for example, products there. You asked before strategies; those are not only strategies, because they are, for example, built in a different product. If you have a motor that's built in an airbag, or a sensor that's built in an airbag, it's going to take a while till a car manufacturer in the US says, "Oh, I'm going to try to find another supplier because it's maybe 82 cents cheaper." So that's because they make top products, and most of them spend enormous amount of their revenue on innovation because they know they will not be able to succeed without that. So it's in the DNA of most of these companies.
Mm-hmm. Paul?
If you allow me, I tip my hat for Switzerland. Because if you think the Swiss franc, we speak about tariffs in one country, but the Swiss franc is for all countries. And if you think in the last 15 years, the Swiss franc versus the euro, you may be wrong, Thomas, if you correct me, but that maybe €1 was something like 1.65 or something, Swiss franc. And now it's not even one or just. And the exports went up. And that's the mindset too of the entrepreneurs in general, but also everybody who is part of the economical system, which is don't claim a future, work for one, and adapt. And we had politicians that let that go too. So we have to also send a message to the politicians to let that happen and create the environment that is moving forward. The other part is innovation, renovation. We have actually an ideal time now to get some researchers and developers from the United States coming here, because with some problems they have there. But these are opportunities. That's the realpolitik, you know.
I don't know if you saw the announcement by the University of Zurich to top research comments. So
yeah,
it's happening. It's
we
happening.
see.
Yes.
That's right. Switzerland works. They do things, but think about it. And you mentioned that. I think for a country, industrialization, having factories, is extremely important. And Europe and other countries, they had let that go a bit because they felt that was from and actually the globalization allowed you to do salaries were cheaper and all that stuff. Switzerland always embraced manufacturing and all that still, and that is also with the apprenticeships and all that. It's all linked. So we should be aware of that, and I think Switzerland should be very explicitly aware of why are we where we are, and don't play around with that. And the world of today is challenging that even more, and giving all reasons of starting to claim a future instead of working one. Actually, if you think, and Europe is a little bit in that trap, because Europe at the end of, not Europe alone, I would say the West, is actually drunk on welfare and peace, and is blind on crisis and blind on reality, and they don't adapt, and the social system is so locked in, and they claim people, and you cannot break that ice. I don't have to mention any country that is a good example of that, but it's a country not too far from here, where they speak French. If you see...
And it's not Belgium, right?
And Belgium, for that matter, is not much better, but it's a pity because the population doesn't connect anymore with the reality somewhere. That's why I'm saying they'll drink on peace and welfare. And peace, they see peace as a sign of performance. It's not. It is a result of many things, but the many things you have to do first. It's not a given. Yeah. So, and these mindsets, you see, I'm retired now, I can be philosopher, you see, but
I quite enjoy this.
But somewhere we have to reconnect the population and the broader base of countries towards these realities, and then say, let's shape it together. For that, we have to sacrifice sometimes, because at the end of the day, the debt we have is to have a luxury life now on the base of our children. And so inflation is, but I feel inflation is always the last legal means for authorities to reduce their debt. At the end of the day, that's what they do, and so we're going to have some inflation coming.
Okay, so how do we apply this to Switzerland? Again, innovation is key, diversification is key in a crisis, and we can't hide behind a state. What does Switzerland do to remain competitive?
I mean, just on the question before, when you ask Rahul, he said, like, can Switzerland innovate itself out of this crisis? And this crisis, I assume you refer to the tariffs, right?
Yes.
But this crisis, to me, can also mean what we just heard Paul talking about, right? The fact that what you mentioned, Germany in real terms didn't grow for the last decade. No one has mentioned China and the threat, technological competition, manufacturing competition coming out of China, what that means to Swiss European manufacturers, to the German and French car industry. And so I think these things, from what I look at this from a financial perspective, I would agree with Paul. I'm afraid Switzerland at this point is relatively little it can do, right? Because when I listen to the news flow out of Paris, the things happening there, and I'm not referring to the Louvre, right? I mean, it needs to get worse, I think, before it gets better, right? We need to see more pressure on these 10, 15, 30-year French sovereign bonds before the political elite in this country decides that we have to bite the bullet and we have to do something that politically is very costly, is very unpopular. It's interesting to follow that conversation right now in the UK. They seem to be one or half a step further ahead in that journey. Maybe there's a somewhat greater willingness to tackle some of these things. But before this happens, before I think specifically Europe wakes up to this changing international landscape, for international competition, I think the best thing Switzerland can do is sort of to try as hard as it can to be independent, to innovate, to make sure that it finds ways to cooperate and trade and collaborate with as many countries out there as possible.
I'm seeing a lot of audience questions come in, so let me get to those. Should Switzerland still strive for a Swiss-American free trade agreement, possibly with a post-Trump administration? Didn't the People Party think that they could strike it with the Trump administration? But I guess that's very far off.
Yeah, I think the word free trade agreement is not appropriate anymore. And not because of the free, but a free trade agreement really abides to WTO rules. It's got a set of issues it needs to address, and so on and so on. So I think one needs to talk about a trade agreement, and a trade agreement is still something that Switzerland and we also strive for at this point in time. And I do not think it's unrealistic, but also do not know if it will happen or not. So I think it's an important thing. I also know that in the Trump era during President Biden's administration, there was zero appetite to even discuss trade deals with us or with any other country. So I think now could be an interesting a moment. To what was said before, I think innovation is a good thing. Diversification, free trade agreements was mentioned before. Switzerland also does. We also just did Mercosur, India, However, I think a big point that came out in your survey is also what can the government do to enable all of these kind of things. And there, I think we are not doing a very good job currently in regulating businesses, adding costs to labor, which goes into the point that also Paul mentioned with welfare. Welfare is kind of the fruit you get for having worked. If you look at Swiss numbers in the 60s, about 33% of the Swiss budget was used for defense and about 10 for social welfare, and now it's like 35 for welfare and about 5% for defense. And I think, again, something which was again mentioned before, I think we need to completely rethink all of this. I do not think that in 10 years we'll be spending, especially in this country, so little on defense, for example, or on resilience in terms of energy. And all of this needs also government investments, government money, and that's all tax money, and one needs to then make some hard choices.
Defense is going to increase in Switzerland because they buy some planes. Remember that.
Sorry, what's increasing in Switzerland?
The defense expenses are going to, because they buy some planes.
Right, but I mean, at the moment we have no defense. We have zero air defense, just nothing.
I hear that the budget is quite strained from the government side.
But that's exactly what I meant with the priorities.
Right.
I think, and that's what also was alluded to. It's a question of what you spend your money on. It's not, do I get more money? So then what do I spend the money I have on?
Well, in Germany, there was only one way of doing this, and that was relaxing or refiguring the debt brake to find an exception to this.
But that's a dangerous thing. You see,
why is that?
Again, they tip my hat for Switzerland. They're disciplined. Budget in balance. I mean, but these are things that are not a given. If you see the other countries going with 6%, 7% deficit and all, it's you have to hick it up. You have to maintain the discipline, and now the whole atmosphere now, the whole environment is like, okay, but give yourself a break because these are difficult times. We always think that the crisis of today is the worst crisis ever had. It's not true.
You've seen a fair share of crises.
I've seen a few, but everybody. Look, but we have a selective memory, you see, and we think now that's the worst of time. I must say it's a little bit messy lately. And there's something we don't talk about. There's a war going on. And that's an unpredictable event that is life-threatening, I must say. And that's why we start to give ourselves a break. Let's build up welfare. Let's calm people down, etc. So I think the biggest challenge we have in our society is in the north, in the west, northwest, is basically reconnect our global people, the base, with reality, and maintain the importance of economics and the economic and entrepreneurship and all that is important. It's the engine of our society. It is what allows to have the welfare. And that is dislinked. We have more and more politicians that don't have a clue of reality. Think about I should not say it's public, but anyhow, you have 750 parliamentarians in Strasbourg. How can Europe be in a world that is getting faster and faster and faster? How can you actually link up democratic decision-taking with that fast-moving world when you have other countries do have another system that goes faster? You see, I think also all what we perceive here in the West as crisis, crisis, crisis. Many countries are just happy. They say, let's tear the West themselves apart, because that gives us opportunity of playing, of being, of going forward.
So sorry to interrupt your philosophical musings here, but let's, with all due respect, you mentioned a very good point, and that's why I want to jump in here. Other countries who are watching this, and let's take China, for example. How do we deal with China? Of course, it used to be such a great export market. Now we're at the risk of being the receiver of overcapacity. How do Swiss businesses deal with China, friend or foe?
I think for many companies it's both. So you work in China and you have a market in China and you sell, or you have an entity in China and you have the same thing in the US or in other places. I think for big companies you have a little bit the system that you have kind of China for China, the US for the US. That's slowly happening now during this Trump administration, and sometimes you have a kind of Switzerland for the rest of the world. I mean, how should we deal with China? According to me, China is the only other nation that is technologically advancing apart from the US. So I don't think there is a big question of whether a country like Switzerland can in any way remain insulate itself from China. So I think we need to deal with China. What we need to do as Switzerland, I think, is to make sure that we do not get squeezed in some way in the middle, but that is for many countries. Right. If you take some Asian countries like Malaysia, for example, they are even more exposed to this kind of, they just concluded a trade deal with the US, but on the other hand, they have kind of China in there all around them, basically. So I think that is going to be one of the big discussions in the near future. But you know, the US also concluded a trade deal with China, so why shouldn't other countries do the same thing? It gets riskier when you talk about export controls, investment screening, sanctions, and so on.
Yes, there's a question on China here. China's role in global innovation is fast increasing. Should we not start to look for R&D cooperations more than to trade alone? Any views on this?
Yes.
I'll take it.
Because yeah, but China, should you work with China? China is there, it's big.
Exactly.
I mean, so you have to do it as long as you can live up to your values, basically, and all. And I must say, each time you go to China, we speak about our environment and all that. Well, I must say they're very serious about that, because it's they know it's life threatening for them. So the innovation, definitely, and I know it's but the intellectual property and all, these are issues. But if you want to have a clean thing to start playing fully, and security of everything and all that, you're not going to take risk. It's difficult to be there, but stupid not to be there.
Mm-hmm. You have a pretty big market there, which was somewhat weaker, though, when you take a look at the past couple of quarters. I know you've got a new management in place, which is tackling everything head on. What's your message?
I'm retired of Nestlé now, so I don't talk about it.
You're still the honorary chairman.
Yeah.
And you know Philip very well, obviously. I'm
confident. Well, it's a nice 1.4 billion people. It's a big country. Nutrition is an important part of the equation, so we're part of that. So looking forward to good years to come. Another country that we don't talk too much, India. India is still small, we have mentioned it.
Yes.
But that's a very interesting country where somebody is working silently, framing it in a good way. It's going to be slow, steady. But there are 1.5 billion people, and going forward with 5, 6, 7, 8% growth, not bad on a smaller base. But you have other countries coming. Think about Nigeria. Nigeria in a few years' time is going to be over 1 billion people. Think about that. So that's a reality that I feel we should start also see as, in other words, we spoke about supply chain, trade partners.
Right.
Well, level up. There are many parts of the world where we can have good relationships with.
Michael, and this is sort of switching gears here, but I guess you talked to your clients about this all the time. Can the rearmament of Europe be the way out of its economic anemia?
No.
No, okay.
I mean,
That's the hope.
I'm not, there's a lot of PhD economists here in this room. They can explain that better than I can. But I mean, essentially, the way I think about this is that the fiscal multiplier on buying a tank or building a tank is as low as it possibly can be, right? I mean, you mentioned Nigeria. If you build a bridge from A to B near Lagos, you can involve, you can foster trade, etc. There's a lot of, revenues, multipliers you get from that investment. On defense investments, I think, you hire a few people, you let them run a few maneuvers, but essentially that's not going to lift real economic growth in Germany in a meaningful manner. I do agree with Rahul. I mean, there's going to be difficult decisions to be made by governments, left, right, center, including Switzerland. The planes you mentioned, that, by the way, come without weapons, I understand. And so these are tough decisions, right? And that brings us back to the notion that you also mentioned, that fiscal discipline is of great value. I mean, the fact that in this country we have the lowest interest rates on the planet, that also helps the Swiss companies to be competitive internationally, because our cost of capital is so much lower than anywhere else, right? And so once you give this away, you start breaking up these rules, like the debt break in Germany. You do one step, and tomorrow is the next, and then comes the next, and then your advantage is gone. So I do think we're very well advised, as painful as it might be right now, to stick to these sort of old-fashioned rules and discipline, because they served us, I think, economically, they served us really, really well for a long, long time. And let's not forget, to make a last point, as I said before, right now, we sit into this, we read the media, we watch the news, and it's all about this trade story. But who knows, in a year or two, this might be a bit on the back burner. We'll have other issues, of course, as well, right? But I'm always a bit cautious when people sort of argue, let's do everything differently right now, because the world has become so much different. Usually it doesn't.
Rahul, one follow-up question here on the rearmament in Europe. Is Switzerland, for various different reasons, going to miss out on that boom and rearmament? Can that be a way out of this current mess that Switzerland is in from the tariff front?
I wouldn't connect those 2 points a lot, because I don't think the tariff thing has got so much to do with rearmament. However, I don't think that we will miss out in any way. I think it is our obligation that we do not miss out. Switzerland has one of the lowest defense spendings. And okay, Switzerland is a neutral country, but we are at 0.7%. If you add maybe the militia system, then it's a bit more. However, of GDP is defense spending. I do not think that we'll be able to do that in the long run, because we will need to be able to defend ourselves. So I don't think it's even a choice. With regard to the benefits of defense spending, I do think that there has been a lot of, if you look at the internet, but there are also other areas, the tanks, if you look at Germany, car industry, also Japan, similar. I do think that there are benefits in defense spending. I do think that there is a lot of innovation that can be created through defense spending. In the US, you have an interesting phase of robotics, AI, and defense that's coming together. Some of you know they are all kind of drone companies, they are AI companies that work exactly in that sphere, and they are doing extremely well. And I think they help, on one hand, the US government to advance, but they also help the technology to advance to the extent that some of those companies have governmental clients and at the same time commercial clients for a similar use. So I do think defense spending can be very beneficial, especially R&D in defense in a country like Switzerland.
Let's take some questions from the audience here. Anyone with a question here? There's one on the left. There's one here as well.
Thank you. I believe your climate risk being very low is maybe a gender bias of the audience. But my question is, it was touched at the very opening remarks that global trade is good. However, sometimes the gains are not shared. And there's one group that is benefiting, and maybe some groups are not benefiting. And today, and right now, it was mentioned that Trump, the reason for raising tariffs is also to create a certain source of income to be able to pay his base. So my question is the neoliberal trade system failing, especially when we see so much populist politics coming out from the left and the right? Some people compared Mandani's campaign in New York similar to Trump, for example. Do we see that because we're failing to address certain inequalities in the world?
I would say yes.
Yes.
May I?
Yeah.
Yes. To a certain extent, the global open trade and globalization of trade, etc., has benefited more the North than the South. And that's why you have also the South it's quite messy there too. So I think we have to find systems where we actually start investing more in these countries. I do believe, also like North America, we should go. They should take care of Latin America. It's their backyard. It's youth. They have immigration anyhow. They're coming. You better start investing in your backyard. Same for Europe. I think Europe should play also more with Africa. We have some mental blockage because of the colonial times still, but we should go there. Actually, Nestlé as such is only doing that as short supply chains. We invest in these countries. We are present and have our people and factories, etc. So I feel we should do more of that, and that would allow to have more stability. That would allow also to have, because the immigration somewhere to a certain extent have less reasons to have it, because that's a big burden coming to us, and we don't have an answer yet to this over time. You think we need manpower, aging population in Europe and all that. It's true, but think about in my area there agriculture and so political stability. And I was a few days ago still in Latin America, and if you think. It's quite messy. If you country by country and all, if you think it through, it's a continent of the permanent future, but it's not coming because basically there's no North interest in stabilizing these countries from within. You see, so you have a good point. Environment, very strange. Have you seen? It was very low on the agenda all of a sudden. This is in 2 or 3 years' time. All of a sudden, flip, I think the most serious dimensions on the environment are the companies. More than the politicians, because they change. Green Deal, it's no deal all of a sudden, or something. And the supply chain thing and all that, we're going to put it on the back burner. And we in Switzerland, we already decided it has to be like this, like Europe wants to have it. So we have that now coming to us. And the Europe say we're going to wait. So that's a little bit the problem we have in our to lead a company. The biggest challenge I have, I always say, is not the famous VUCA volatility always had, the uncertainty, complexity. It's the ambiguity of things. What was right yesterday is not right anymore, but it's not wrong either. What was good yesterday is not good anymore, but it's not bad either. How do you manage a company like this? I mean, and that's a little bit the thing. There is not one truth anymore. We had convergence of references through the international institutions, but also on how we see the world. This has changed. I think that's the biggest challenge that actually all leadership in our world has. There is not one way of seeing the same reality. There are values, there are basic ways of philosophies, of seeing things, and I think we have to learn to cope with that and have judgment capacity. There's too many intelligent people that we lack judgment capacity, wise people. There's lack of wise people.
Paul, let me try again. Does the new CEO of your company have all these skills?
He has it all. I know him from a long time.
I just wanted to quickly add on the, if I understood correctly, the gender bias here on the stage. Excuse me? Generation. Oh, I'm still 25. Come on. No, but the point, I just want to be very clear on this. I think what I try to say is that there's a lot of risks out there, but I'm as an economist and as an investor, I'm worried more about some of the things that were not on that list. Like what you say, for me, income and income inequality, actually, if you think through it, the WEF is doing some great work on that. There's an annual publication which is called, I think, the Global Risk Monitor or something like this.
Yes.
It's beautiful how it shows the interconnection between these risks. If you look at that study, it's showing that income inequality, health and wealth, which is something we just barely touched on, right? It's another huge topic, right? That people just getting poorer and less healthy. Disinformation is a huge topic. Censorship. All these things, they're currently very much on the back burner because someone in the US who's currently renovating his house is deciding to have another agenda, right? And that's what I think is super, super important.
Rahul, before we wrap this up, I have two very important questions for you. Can Swiss companies get through this crisis without closer association with the EU, or is that absolutely critical?
I think there's a disconnect in timing. So this closer association with the EU in Switzerland, we are going to probably vote in 2027. By then, either we have these 39% and they'll be there and absorbed, or we will not have them. So I'm not sure. The second thing, maybe because there have been many hits against the person sitting in the White House, I do want to say one or two things that I think an issue is the way he addresses many of these topics, although in many areas I think the what is not necessarily wrong, it's the how. And since we did talk about this whole disconnect between the population, one of the reasons, and one can completely defer and be of a different opinion, one of the reasons why Brexit happened and one of the reasons why also Donald Trump was elected with a sweeping majority, he won all the swing states, he won both the chambers, was because there seemed to be many people that seem to have been missing out on this globalization. Basically exactly what the other two said. And now, will he solve it or not? I do not know, but he did at least address the problem, and he's trying to do something, because one of the reasons for these tariffs is also to bring jobs and investments to the US, and not just anywhere, not to the coast, but mainly into this, what is called Midland or Rust Belt or flyover states. So he's basically also addressing that, and many other topics, also with the tariffs. Just to illustrate that, if you are from the EU or from other economic blocs, the US had an average tariff rate of about 3.3%, and on agriculture 5.1%. In Switzerland, we have industrial tariffs, we are good, but otherwise we are far away. So a car from the US that came into Europe had 10% tariffs, and a car coming from the EU into the US, 2.5. So why should it be 4 times more now? I do completely agree that the word reciprocity is not exactly now met with what he's currently doing. However, I do think that there are many areas like the defense spending, and that was also said on the panel before, that Europe outsourced its defense to the US. So all these points are being addressed. So with whatever is happening, and again, I do not subscribe to many ways that is happening, but I do think quite a few things that Trump is doing have something to do with what the population and the people want, and might lead at the end to a better result globally.
Is that just wishful thinking, or are we seeing first signs?
No, I have no idea, but I do think that, for example, rearmament of Europe makes a lot of sense.
In the media, we saw reports, photographs of Team Switzerland, some of the biggest business leaders of Switzerland. Paul, you weren't there, but others were in the White House trying to hammer out a deal. What do you know? What can you tell us? A better deal.
So, I will not tell you a lot. The only thing I can tell you is that you saw what happened, and then Guy Parmelin spoke to Jamieson Greer, and now let's see what happens.
Paul, do you know anything?
I don't know anything.
I'm still on this generation thing.
I see. So the hope is
Very interesting, though.
the hope is that, Raul, hopefully by Davos, World Economic Forum in January, we might get a deal. Is that the hope? Is that the expectation? A better deal?
No,
Maybe 15% like the EU? Would that be a good deal?
Right. I think the expectation, I think the hope would be at Davos or even before Davos, preferably, because most companies, they cannot wait till Davos.
15%, is that what you're hearing?
I guess below that it's going to be tough. Liechtenstein, with which we have a customs union, a Zollunion, they are also at 15%, which causes a lot of complication, actually. So I think if let's see.
Final point?
One thing that we have to put in front of us is that all what we talk here is not linked with one person. It was actually all happening many years before. The destructuring of countries, the populism, the unsatisfactory, the debt crisis, all that actually was in the making. The not inclusion, disequalities, the developing countries that were still developing and trying to immigration. So in other words, watch out that we don't put the ticket on one person as the cause of, etc., etc. It's not true. He makes it a little bit more visible, and so we have to see the deeper root causes of things, and it is business, it is societal. And somewhere there's leadership in general, also politicians definitely, but also leadership in general. I think we have to start framing for the population the broader issues, because if not, we're going to go straight against the wall. And it's a pity that you mentioned it has to get worse before it gets better. How stupid can we be? I mean, and it's a pity, because at the end of the day, if we would frame it right, we would start on a journey that corrects a little bit the past and start building. And I think it's linked with education and mindsets.
Wise words from Paul Bulcke. Thank you so much for your inputs as well. Really appreciate it. And we're hoping for a better trade deal very soon. Thank you so much. Thank you.